I could see a bigger rally in Ethereum than Bitcoin, and that's kind of what you would expect in the pump part, in the final meteoric parabolic move. Ethereum has historically outperformed Bitcoin, and it probably should again. So let's say Bitcoin gets to 150, like I think it will, and let's say we don't go all the way back to 10 to 1, but we go to, we're at 1.8 now. Let's say we get down to 1.5. It's probably not aggressive enough, but let's say it's 1.5. So that's 10,000. I think there are a lot of people that have that number in their brain, and a lot of people say, well, that's not enough. Like, fine. Let's say it gets all the way back to 10 to 1. Then that'd be 15,000. So comfortably somewhere between 10 and 15. Here's the funny thing. I'm sure you've done the test. It's like a cognition, not a cognition, it's the Kahneman-Tversky thing, where they ask you within 99.999% accuracy, give me the range for X. And they give you a bunch of stuff. The length of the Nile River, the distance to the moon. And the right answer for every question is 0 and infinity.
During crypto bull runs, Ethereum has historically outperformed Bitcoin, and it probably will again. Bitcoin's price will reach $150,000 in late 2024 or early 2025. This means Ethereum will see a 300% rise above its all-time high price to roughly $15,000. This is the latest prediction out from Mark Yusko. In his most recent interview, Yusko gave his take on navigating the wild world of crypto, stressing the importance of timing and strategy. Yusko compares altcoin investing to investing in startups in their early days, highlighting the thrill and risk of chasing big gains. Yusko believes spreading your bets is the best strategy to balance out risk and reward, readying yourself for the inevitable market slumps, or what he calls crypto winters. When it comes to trading, Yusko keeps it simple: follow the trends and cut your losses. Taking cues from big name investors, he emphasizes the need to stay disciplined and know when to walk away. Make sure to stick around to the end of the video where Yusko reveals his key strategies for when it's best to sell your crypto. Also guys, if you want to stay most up to date on the crypto world, I send out a daily 5-minute crypto newsletter that covers expert predictions, on-chain data breakdowns, and breaking news, all for free. Click the first link in the description, enter your email, and join over 50,000 others to become a better crypto investor right now. Now here's Mark Yusko with the best crypto strategy for 2024.
I'm a venture capitalist. That's my day job. And so in our funds, we own assets, mostly equity, but 30% liquid protocols. And we buy them and we hold them. We don't trade them. And there are people that do that really well, but that's not us. Now, those funds have a finite life. So my first fund, raised in 2018, is coming up on the end of its life. So in this cycle, we will likely take profits, as we get towards crypto winter, June of 25, sometime between January and June of 25. So in our second fund, where we've got a little longer, we probably won't. In our third fund, where we're just starting, we definitely won't. And our fourth fund, which we're raising, clearly we haven't even bought anything yet. So that's how I think about it from that standpoint. Now, from a trading perspective, I think right now you don't need to really trade because we're here, about to go here. So I just want to keep accumulating and be long. And do I believe that, Bitcoin will move X, Ethereum probably moves 1.3X, 1.4X. The others move 1.5 to 1.8X to 2X, and some of the alts are going to move 10, 20. The problem, as you get further down the stack, the upside potential is higher, but the downside potential is you lose everything. Like literally, if you think about what most utility tokens are, they are gambling vehicles. And that's not necessarily a negative. I mean, they are what they are because you don't own equity, you don't own debt, you don't own a share of cash flows. They are literally just given value because other people buy them. Take the Doge coins or the Pepe coins. There is no utility at this point. Now, if Elon makes Doge a payment rail, okay, but he hasn't done that yet. So in those cases, the problem is they're like pre-seed stage venture. The upside potential is huge, right? If you invest in something at fractions of a penny and it goes to $1, you've made a lot of money, okay? But 97, 98, 99% of pre-seed stage venture capital deals go to zero. Even if they get big market caps in the short term, they just never catch on and they go to zero. So I bet if you look back in history, the very vast majority of these, projects, there's a whole bunch of them that go to zero, and that's fine, as long as you don't rifle shoot. If you rifle shoot and you put all your wealth in a single altcoin, that seems like a bad strategy to me. Now, if you're right, and that's one that goes up and not down, you get rich. And Gary Cardone and I talked, and he was talking about this, and he said, somebody came back at him and said, no, you're talking about being concentrated. We need to be diversified. I'm like, well, look, all great wealth comes from concentration. Every great fortune came from a concentrated position in stock, in business, in real estate, in a commodity, whatever. The problem is you don't hear about the losers. I would say if you're thinking about investing in alts, one, scattershot, have a bunch of them, ride the winners. And then the question about, well, what do you do? There is going to be another cycle. There will be another crypto winter, as sure as we're going to have an eclipse on April 8th. There's no way to stop it, right? It's going to go dark. Actually, this freaked me out a little bit. We're going to have a winter, as sure as the sun is going to blot out, from the sky when the moon goes across it, and they can't stop it. There's going to be another winter. So if I were trading, which I'm not a trader, I'm an investor, so I buy and I hold, and I'll weather the storms. But if I were a trader, I would ride through, mid-year 25. I think the supply-demand imbalances are going to be really robust. I think the technology that gets adopted, and this is where they're in the alt space. There are a couple ways to approach it. So one is scattershot the things that are moving and just, let them run, sell the losers fast. Because if you think about the great investors of all time or the great traders of all time, like Paul Tudor Jones, there's a picture of him in his dorm room at UVA, and he has this sign above his desk, losers average losers. And in trading, that's absolutely true. In investing, it's not 100% true, but in trading, never ever chase a loser. Just sell. Just move on to the next idea. But the corollary to that is winners press winners. The hardest thing to do in trading is to press your winners. And I was very lucky in my life and my career. I've had a lot of great mentors, and one was Julian Robertson, maybe one of the greatest investors of all time. And I've talked to lots of people that work for Julian, and they all said the same thing. Three things. One, most person of the highest integrity they've ever met, like literally just never fudged the numbers. Two, most competitive person they've ever met. I mean, just wants to win. There's the question, do you like to win or do you hate to lose? You love to win, hate to lose, and it matters which one you pick. He liked to win. And the third is they said he had an uncanny ability to double up. So he would press his winners. And then at some point, he would certainly take profits. And I think for me, I'm more of there's a guy I follow on Twitter, and we're Twitter friends, which I have a lot of friends from Twitter over the years, Larry Tentarelli. And Larry, he's not an investor by training. I mean, he had a different career, but he became a trader And he's all about technicals and momentum. But he's religious about it and disciplined about it. And one of the things that I love he says is nothing good happens below the 200-day moving average, right? And the trend will continue in the direction of where you are relative to the 200-day. So Fed, with respect to rates, is reactive, right? They're not proactive. So they react to the economy, both positively and negatively. So when the economy's ripping and inflation's starting to turn up and growth is high, they'll start to rein back in the liquidity. They'll raise rates and try to slow down the car so it doesn't careen off the edge. And inevitably, that's when they break things because they go too far, right? Because they are reactive. And because they drive in the rearview mirror. And so when you're driving in the rearview mirror and the road turns, you go off the edge of the cliff. So the same thing is true on cutting, is they'll wait too long. The economy will have already slowed. I mean, there are a lot of indicators that say things have slowed. I mean, Japan's in technical recession, Europe's in technical recession. Now we're in this great expansion. Well, kinda. I mean, we spent $1 trillion in deficit to get 300 billion in growth in the fourth quarter. That seems like a bad trade, right? I should at least get 1-to-1. If I spend $1 trillion, I should get $1 trillion. But there's slippage now because we're so highly levered and there's a lot of interest costs. So I think this cut in rates will be like all previous cuts in rates. It'll be because they perceive that things are getting worse, not better. You don't cut rates when you think things are good. In fact, I say this all the time. If you look around the world, high rates are a sign of economic strength. Low rates are a sign of economic weakness, right? If you go back to the global financial crisis, what did everybody do to rates? They cut them to zero or even negative. So if you have negative interest rates, you are not confident about the future, right? If you're trying to force people to buy instead of save their money because you're penalizing them for putting it in the bank, you're trying to propel the economy out of the doldrums. Conversely, if rates are high, like in India, you look over the last 20 years, India has been the best performing market in the world by far, like way better than the US. It's not close, actually. And you say, but India is a third world country. Yep, it is, by and large. They got some first world parts, but yeah, it's got its challenges. But their stock market is the best performing market in the world over 23 years. And it's because, right, they have good demographics, they have great rule of law, they have some really smart entrepreneurs, and they have some really robust companies. But they also have high rates. They also have a young population, and young populations tend to have higher inflation, which demands higher rates. Old demographics, Europe, Japan, US, ultimately China, have the opposite. You need lower rates. And Chinese rates just hit a new low, not because they are trying to stimulate, I mean, they're trying to stimulate the economy, but the rates hit because people are looking at the demographic wave that's coming. Now, I think the thing they're missing is that'll actually be a really good thing for China, believe it or not, because they have a massive baby boom that no one talks about. All they talk about is the baby bust, which is real. But as the really old population starts to decline, this 300 million cohort of millennials, they have 5 times as many millennials as the United States, is going to rise. And that's going to be very interesting because they won't have the same type of entitlement problem that we do. Whereas as me and all my brethren and sisters start to retire, your generation is going to have to pay us because of Social Security, Medicare, Medicaid, which nobody wants to cut, even though life expectancies are longer and all this good stuff. But I think that's an interesting dynamic that nobody wants to talk about. But bottom line is rates will likely get cut, probably not anytime soon, although it is an election year. So watch out for gerrymandering as we come into the election, because right now the Dems look like they're going to get wiped out, but they're going to do everything, including trying to get Taylor Swift to endorse the president, which I think would be hilarious, but we'll see.
So there's Mark Yusko giving his thoughts on the crypto scene. He's got some pretty solid advice for anyone looking to dip their toes into the world of digital assets. Essentially, he's saying that timing is key. Knowing when to sell can make all the difference. He also stresses the importance of diversifying your investments to minimize risk. By following these simple principles and staying disciplined, Yusko believes anyone can navigate the unpredictable crypto market with confidence. Before we go, a quick reminder for those who are keen on staying updated in the fast-paced world of crypto and Bitcoin. Consider subscribing to our daily 5-minute crypto newsletter. It's a concise resource with the latest expert predictions, any breaking news, and top on-chain analysis trusted by over 50,000 subscribers for insightful crypto investment information. Click the first link in the description to join our community and elevate your crypto investment knowledge today. Anyway guys, hope you all enjoyed today's video and that provided you with some value. I'll see you all in the next one, and as always, all the best.